Hello, everybody. Welcome to the Trading with Ashley show. It has been an event-filled day, and it's still going. So we were waiting till after hours to hear about Nvda earnings, and they crushed it. They did really good, and the stock is flying after hours. Now, we are super excited to open up our portfolios tomorrow because we took several trades that had everything to do with selling options versus buying options. We took advantage of that high IV that was taking place before earnings, and we put on a variety of plays. Now, there's one particular play that I wanted to bring you tonight because it has to do with doing a put credit spread. And put credit spreads are great for smaller accounts. This trade that I'm going to show you only required about $1,000 to put the trade on, and it had a 28% return. And because of IV Crush and the stock moving up tomorrow, we will be able to exit the trade within the next few days, more than likely at about 50%, which would give us a 14% return in a very short window of time. And that's the power of trading if you know what you're doing. So I had shared this with the community today, and a lot of people joined in on the fun. And what I did to make this trade safer, because it is over earnings, I went further out and I went really low in strike price for the opening part of the trade. And that keeps us a little bit safer because we are insulated against sharp movements down quickly. We have time for everyone to buy the stock and push the price back up for our trade to be safe. But it looks like it'll be pretty safe tomorrow based on what happened overnight. Now, we have a little bit more excitement going on right now. We just did receive the news that an appeals court is blocking Trump's trade tariffs. So we're going to see how that all plays out. It's actually going to increase volatility even more, which, if you're an option seller, that's not a bad thing. Now, if you're more into buying options because that's just your comfort level, I do have a safer way for you to trade options, and it has everything to do with skips and leaps. What are skips? It is a term that I coined. I actually had it trademarked. And now me and my good friend Stocks with Josh, we actually have teamed up and we are doing a workshop on Saturday. He's going to teach how to read the charts so that you know how to enter and exit these powerful trading tools. And I will teach you all about the trading tools and how they work together to build your wealth. You certainly don't want to miss this workshop. Okay, let's go into the computer. I'm going to show you the trade, and then you can prepare yourself to do a similar trade if there's another stock that you're bullish on over earnings. Here's the trade I called out in the community, and it was actually early this morning when I was looking at different opportunities for everyone. Now, this one expires in December, and I looked at the current expected move to select our strike prices. So the expected move after earnings was anywhere between 121 and 142. Now, this adjusts daily, so I wanted to take a fresh look at that. Once I saw that, then I went ahead and put on this trade, and here's how it works. It was a put credit spread. The opening trade was at the 115 mark because remember, our expected move only went down to 121. So we sold this put, and for that we received $8.44. But then to protect us, we actually purchased a put. This is the 105, and when we purchased that, it was $5.47. So the credit we received on this trade was $282. So that's $282. And it took about $1,000 to put on the trade. And here's why. When you do a put credit spread, you look at the difference between the two strikes. And whatever that difference is how much capital it takes to put on the trade. And let me explain why. When I sold this put for 115, assuming I'm actually put the shares, I have a purchased put that allows me to sell those same shares at 105. The difference between these two is $10, and if you multiply that by 100, that's $1,000. So that's what your broker is requiring for the trade. Now, when you look at this and you take this $280 divided by the 1,000 that it took, that's a 28% return. Now, it doesn't expire until December, but now I'm going to take you to an option calculator, and we're going to look at what point we might be at 50% of this trade, and we can exit gracefully, releasing all of our capital being held, and we can move on to the next trade. Here's the actual trade right here, and you can see it's the exact trade that we put on. If you lower this implied volatility, because it will come down a little, that's going to adjust the results. And that's actually good if you are selling puts. And this is a credit spread, so we sold a higher strike than the one that we purchased. So what you can do is you can look down here and change this to profit and loss percentage and see when we might be at the 50% mark. Well, after hours, Nvidia is already at the 140 mark, and so tomorrow it may push up even higher. But if we get to 150, let's say we get to 150 in the next week or so, we're going to already be at the 50% mark. And that means we can exit this trade that doesn't expire until December. We can actually exit it in just a few weeks and hold on to the difference. So if you click it back to profit and loss, and let's lock in right here to this 150.49%. That ends up being $137 that we are able to keep from this trade if we exit early. You can hold on to it longer, but it's really good to go ahead and enjoy this IV crush with the positive movement up, and then you can take that same $1,000 that's being held for the trade and use it for other similar setups. I love helping all of you. If you could do me a favor and just leave one comment on this video and let me know if you ever took one of the trade setups that I have given you and if you made money off of it. That's all I need to hear to keep motivating me to crank out more videos for you. Remember, if you're with me, Trading with Ashley, there is no trader left behind. What if one workshop could change the way you trade forever? Josh and I are hosting a live 2-hour workshop where I'll be teaching you all things skips. A smarter, lower-risk option strategy I actually developed and trademarked to help you grow your portfolio without gambling.
And I'll be diving into charting mastery, from indicators that work to how to spot trend reversals before they happen.
It's all happening Saturday, May the 31st at 6 p.m. EST, and spots are limited.
Click the link below to secure your spot and thank us later when you turn your trades into a Wall Street ATM.
Trust us, your future self will thank you.